Hi there traders, this is Steve Miley, market chartist for fxexplain.co.uk, and here we're going to go through our regular MacroWatch, our look back at the last week's macro fundamental geopolitical events, all the data, central banks and geopolitical events that impacted markets last week, and then looking out into this week, the week commencing the 4th of November 2019, what do we have going into this week on that macro side. So first of all, the main event last week was the Federal Reserve meeting on Wednesday. They cut rates, the third rate cut as anticipated by markets, the third rate cut of 2019 since July, delivered by the Federal Open Market Committee, the FOMC. But the market in here very much reacted as they were anticipating a far more hawkish tone from the Fed. The Fed did tell us that the mid-cycle adjustment was complete for now. They also said that they would be on pause for now, watching the data. But the market very much reacted in a kind of a dovish tone, in that the US dollar sold off, US bonds rallied to lower yield levels, and equity markets liked the rate cut and they went to still higher prices. So equity markets liking that and pushing higher. And they also liked the fact that on Friday then we got the NFP, the non-farm payroll report, part of the US employment report on Friday, and that saw the October data come in at 128,000 jobs added, with consensus at 89, so a strong beat there, but also upward revisions to the September and August data. September numbers adjusted higher from 136 to 180,000. Again, this built on the positivity that we saw on equity markets, with stocks making new recovery highs, and also on previously we'd had strong Chinese factory order data for October, growing at its fastest pace for over 2 years, according to the Market China Manufacturing PMI data. So an upbeat tone coming from China and the US on Friday's data, and then that led to the equity markets pushing higher, the S&P 500 and the tech-heavy Nasdaq achieving new record highs, the Nasdaq pushing above its July peak for the first time. Elsewhere, the UK focus has shifted now away from the Brexit saga after the 31st of October 2019 deadline came and went, as we had an extension out to the 31st of January 2020 for the Brexit deadline now. But a snap general election has been agreed and voted for the 12th of December this year, and the UK goes to the polls for a general election. So this brings in some fresh ambiguity and potential uncertainties going into this year. Please do see our article on both the history of the pound that we've posted on FX Explain, and also the link to CNBC. We have an article on CNBC on the pound going into that general election. Moving on, what else have we seen? Well, ongoing reports and rumours on the US-China trade talks we've seen hitting the news wires over the past week. Thursday, a negative report from an unnamed Chinese official saying that the trade deal was going to be difficult. But then we had the Chinese state media news agency Friday saying that the US and China have reached a consensus on principle. Elsewhere, subpoenas were put out for the impeachment inquiry for President Trump last week. They were issued, and further testimony is likely this coming week. Elsewhere, coming into this week now, we're looking at the Reserve Bank of Australia decision coming up for this Tuesday, and then on Thursday, the Bank of England interest rate decision. Neither central bank is expected to change its interest rates. And then going into this week on the data front, Monday we have European manufacturing PMI and US factory orders. That RBA interest rate decision on Tuesday alongside US ISM non-manufacturing, that service sector PMI. We have the New Zealand employment report on Wednesday, along with European services and composite PMI. German IP industrial production on Thursday, alongside that BOE Bank of England interest rate decision. And then Friday, we finish off the week with Chinese trade data, Canadian employment, and the US Michigan Consumer Sentiment Index. I'm going to wish you all a great trading week. Come back to us soon. And don't forget to follow us on our YouTube channel. So traders, don't forget to catch us on the next FX Explain Macro Watch and all the great content on fxexplain.co.uk.